Mahantesh, Sabarad joining us on the show as well. Mahantesh, your reading of IndusInd numbers?
So the results are quite steady. If you notice that the NIMs are steadier, there is a small bit of NPA reduction. The cost to income ratio is more or less steady as it was in Q2. But the important part is now that we have gone into a new year, most of these banks are now showing a momentum loss in terms of either cost controls, either NPA controls, or margin expansion. So we are not seeing major margin expansion. We are not seeing major reduction in NPA because it's already at a low base, and the costs are rising because most of them are getting into expanding their network and so on and so forth. So what has really happened is that the market is therefore trying to relook and assess that if these costs are getting rebased or rebalanced upwards, some of these costs are not favorable, then the estimates are getting revised downwards.
Yeah, absolutely. That's the take on IndusInd Bank. Although, Mahantesh, you feel the mood is completely different for an ICICI Bank, for instance, because that's also due for its numbers tomorrow, along with, of course, Kotak. But we'll talk about Kotak later, ICICI Bank specifically.
So, the expectation for ICICI Bank is that they will have better credit growth ahead. And of all the banks, the mood now is going away from personal banking space to corporate banking space, and people are trying to figure out which are those banks which will do relatively better in the corporate banking space. And therefore, some names do stand out. ICICI Bank is one of them. SBI is obviously another name that stands out when it comes to corporate banking because of their past the way the banks have worked. The personal banking space or the banks that are attaching a lot of importance to growth in the personal banking space will probably lack. That is why we saw HDFC Bank not doing really better among the banks, and some of the ratios are not improving thereafter. So the NIM expansion possibility exists only in the corporate bank space right now, and probably ICICI Bank, SBI are the ones that could relatively do better in the entire large cap banking space.
Let's see whether they fare better or not. But for the time being, let me toss it to Gaurav to get a sense as to what the street is penciling in for now from ICICI Bank as well as Kotak Mahindra Bank tomorrow.
Yes. So two big banks will come up with the results, ICICI Bank and Kotak Mahindra Bank, and let's see what consensus is expecting from these banks. If we talk about ICICI Bank on operational fronts, net interest income is expected to increase almost by 12% on a YOY basis. PAT is expected to increase almost by 20% on a YOY basis because we may see some kind of lower provisions from the bank in this quarter. Loan book and deposits are expected to rise almost by 19 to 20% on a YOY basis this quarter, and we may see some fall in PPOP, which is pre-provisional operating profit, because cost of funds may rise. Let's not forget that bank has one of the lowest costs of fund amongst the peers, but given that cost of funds will rise and CASA is also expected to remain weak, the NIMS trajectory may also remain weak in this quarter, and we may see some kind of contraction in the NIMS by 15 bips on a quarter-on-quarter basis, and that is why the key commentary which would come from the management on terms of cost of funds on the NIMS trajectory going ahead and the loan growth rate will be key important thing for the bank. If we talk about the asset quality, however, consensus believes that credit quality and slippages are expected to remain lower for the quarter for the bank. Let's also talk about Kotak Mahindra Bank, where net interest income is expected to increase almost by 14.5%, PAT is expected to increase almost by 16.5%, and PPOP growth is expected at 22% on a YOY basis. Deposit and advances will also increase almost in the range of 18 to 20%, the healthy growth on a YOY basis. But NIMS again are expected to bottom out in this quarter as well. Because we may see some kind of fall of 12 to 15 bips on a quarter-on-quarter basis on the NIMS, and we may see them somewhere in the range of 5.1%. Let's not forget that deposit franchise for this bank is actually weaker if we compare it amongst the three largest banks, and that is why any trajectory and any commentary coming on the trajectory of the NIMS, cost of funds, and the trajectory that the bank would follow on the CASA ratio will be important for the bank for tracking going ahead. Let's also keep an eye on any commentary from the new CEO, Mr. Ashok Vaswani, on business growth strategy, because that will also be a key point for the bank in this quarter.
Okay, so those were the expectations from Kotak Mahindra Bank. But I also want your take, Mahantesh, regarding the earnings of UltraTech Cement. First cement major to report its earnings, and it was a decent set, not a big disappointment, neither a big cheer. Anything that stood out to you from the earnings? And then we'll, of course, get Asesha to parse those numbers for us.
So, as you pointed out, there's nothing much in terms of results to read into, either in terms of your analytical ratios from UltraTech. Growth is steadier, and therefore the company is probably headed towards doing better on a growing term basis, as it is most of the cement companies were doing better because of the capex infrastructure thrust and the capex boost that was coming in the entire last year. And there is a spillover that is likely to happen as we go ahead. Probably that is the only takeaway from the results. Nothing in terms of specific on the analytical ratios of the results.
That's on UltraTech right now. Let's just mark a couple of other movers. And of course, the railway stocks are the ones which are really flying off high. RVNL, IRCTC, they're all a buzz in trade. Look at the move that you're seeing on RVNL right now. IRCTC, of course, is holding out very, very smartly in trade. In fact, IRFC is the other one, now more valuable in terms of market cap than an M&M, Bajaj Auto, and some of the other nifty major names as well. Kunal, just to check on what you now read on the charts for both IRFC and IRCTC as well, which has been the sort of last railway stock to participate in the rally.
Yeah, so IRCTC is the last one, I think, but I still believe that even after this rally towards 970, 980, the stock still looks quite fresh for a breakout or a further up move. When we compare this to 2000, I think 2021 highs for IRCTC, and then the correction which had happened, more than 50% odd correction for the stock from the all-time high levels, then a slow gradual recovery, and then a late move as compared to many of the railway names. I would still believe that at current levels of 980 proximity, there should be at least a 10 to 15% upside further from a very immediate short-term perspective. And for many of these other railway names, likes of RVNL, IRFC, etc., even after this 5-day, 7-day up move where these stocks have gained 30-40% in the last 1 week or so, I would still believe that there is more meat ahead for these stocks, because these stocks are now moving into a different tangent altogether, into a fresh breakout on the monthly charts. And I believe that you might see those phases of pause in between, but the longer term trend for these stocks is definitely on the upside.
Okay, the longer term trend for some of these railway stocks is on the upside, but let's just wrap up that point on UltraTech Cement. Asesha is joining us. Asesha, what did you make of the numbers? Any key highlights?
Well, yes, the company indeed has reported better than expected set of numbers, and the internals also look good, very, very strong. Realizations have risen by about 2% on a sequential basis, in line with the rise in cement prices that we saw sequentially. And as far as margins are concerned, it has been a big beat this quarter. Margins have come in at 19.4% versus expectations of 19%. And on a sequential basis also, margins have risen by as much as 350 basis points. Management's commitment to increase its capacity to about 200 MTPA by FY30 remains intact. The company said that in the medium term, that is by FY25, capacity is expected to expand to 157.3 MTPA. Management commentary with respect to the outlook is also very positive. All in all, numbers look very strong. Margins are a big beat this quarter, and the outlook is also very positive.
So that's the latest on UltraTech Cement. It's a thumbs up across the board, and of course the commentary is also something which is getting a thumbs up. But I wanted to shift focus and talk about a couple of these chemical companies with you, Naresh. Aarti Industries, a big breakout on that counter today. Of course, MK had initiated coverage, and that's providing a bit of a fundamental support. And the other one is Deepak Nitrite. Any other name and even a view on these two charts, because now Aarti Industries is up in double digits.
So would have an avoid on both these names. One, because Aarti has already moved up quite a bit, so the risk reward is not there, up already 10%. Deepak Nitrite, for the fact that every time the stock has tried to break out over the last few months, we've not seen a good follow-up action. So in that case, you want to avoid. And overall, if you look at it, we've seen a lot of false breakouts in the whole sector. So chemicals as a sector is something which I'm avoiding purely because the risk reward is not great in some cases. In some cases, there is no follow-up. So for me, it's an avoid.
as far as some of these chemical names are concerned. But Mahantesh, your view, the chemical sector time and again has been coming back. There have been, a bit of a downturns in the buying opportunities that some of these stocks had given. But if you look at the 12-month charts for some of these stocks, phenomenal returns across the board.
Sorry, can you repeat the question, please?
Mahantesh, the question is on specialty chemicals and the entire opportunity there.
Sorry, there's some disturbance. I'm not able to hear you.
No worries. We'll try and repatch that line with you, Mahantesh, so that you're able to hear us a little more clearly. In the meantime, let's listen into the clarification coming in from the Polycab management, because they talked about how there have been some, of course, searches which were made by the income tax authorities, but they haven't got any document or any notice or any official order from them. And they are saying that it's not going to have a material financial impact or any other big impact. Listen into what the management had to say of Polycab.
Search is a slightly longish process because a particular wing of the department is involved initially for search, and once they conclude their process, which generally takes around 2 months, in a few cases probably more than 2 months, they then provide that report to the assessing officer, and then assessing officer takes the final decision and communicate the final conclusion to the assessee. So this is what we experienced. I am aware about the press release. I am assuming the department followed its own set of processes, and that is why they released that press release. At this stage, since we haven't received anything from the department, we are unable to comment more than what Inderbhai has already covered in his opening remark. And as we mentioned to the other investors as well, we'll continue to cooperate with the department, and we are looking forward to maintain our focus on the growth and take the company to the near heights in the quarters and years to come.
Okay, so that was from the Polycab management, but Airtel, that's the stock which has not only managed to hit that 4-digit mark, but has clearly scaled 1100 very easily today as well, sitting with a gain of around 3-4%. And I would request to pull up maybe a week and a month's chart to see the kind of run-up we have seen there. But what's your take, Kunal? The bulk of the rally is behind, or this is just the initial part of the breakout?
No, I think Airtel has been one of the most subtle stocks in terms of the large cap names. When we look at the last 12 months of rally, 12 months back, the stock was at 750. In the last 12 months of monthly gains, I think there have been just 2 months where the stock has given mild negative returns. But then, consecutively, if you look at it, the stock has given classic returns over the last 12 odd months, from 750 levels to 1000, then from 1000 to now 1100 plus, where the stock is trading. I think it's moved fabulously well. And this is a class the indicator that the stock is going into a very strong multi-year long-term uptrend, where it would probably keep on moving up higher in a very slow, steady, in a gradual manner. Even if you look at the month till date returns, the stock is up some 9%, and from those 12-month lows, the stock is up almost 35-40%. So I think when we look at this in the entirety over the next couple of years, I would probably be of the belief that Airtel should be closer to 1400, 1500 marks. So more of a consistent stock, and for traders who have long-term kind of a time horizon, 2 years plus, I think can consider buying the stock at current levels.
Okay, 1400 to 1500 levels expected in Bharti Airtel. But I think we have Mahantesh back with us. Mahantesh, hoping you can hear me a lot better now. My question to you was on specialty chemicals, because today Aarti Industries is seeing a big breakout. Deepak Nitrite too. Have you been watching out this space? Any stocks that stand out for you?
So not basically the talks that you talked of Aarti and Deepak, but the specialty chemical space is indeed doing really well. And I think that has got to do with the overall share of Chinese products coming down. There are a host of chemical companies now in the listed space. So there is an ample choice available from the investor's perspective to pick and choose in terms of the chemical space. In fact, if you'll notice that you should be looking at the chemical and the pharma space in a way together, and you'll notice that many of the pharma companies are also coming back in terms of their performance and deliveries. Simply because the overall cost structure within the specialty chemicals, most of which goes into the pharma space, is either coming down in terms of cost and cost of production, or in terms of volume absorption is really getting higher. So therefore, you will have better choices within the pharma space when you look at the sector together, pharma and chemical as a sector together.
Pharma and chemical, these are the sectors that you're looking at it together, and the entire overdependence there. But just shifting focus and looking at some of the metal stocks which are actually perking up right now. Take a look at Jindal Stainless. That stock is higher by 4.5%. Hindustan Copper is seeing a solid rally as well. Let's pull up some of the names and you will see that there's a metal rally underway. Hindustan Copper, NMDC, APL Apollo in terms of the pipe companies, Tata Steel, Nalco. Some of these stocks are actually sitting at the highest point of the trading session, and the other pack which is actually now outperforming a bit is the oil and gas space. So ONGC up 3.5%, IOC up 3%. There are those comments that came in from the oil minister saying that we are not pushing anything down the throat of these oil marketing companies, and we're not telling them anything either way, and that itself has supported the sentiment on these stocks. But the other one which is down and out in the trading session is Zee Entertainment. My colleague Ankur will join us with the latest on that, because it looks like there is some development there in terms of the meetings which have been held at the company level, at least at the Sony end. So let's see what comes out of that. For now, the street is factoring in a bit of a weakness. But in the meantime, if I can, come to you, Naresh, as far as some of these metal stocks is concerned, what's the top recommendation?
Mining space more than the steel space. So NMDC looks promising. It had a decent correction from 225 to almost 200, 205 levels, has started recovering. So NMDC could again go back up. Then another PSU name, which is MOIL, which has given a fresh breakout. The stock has given a multi-year high as well. The stock used to be 280, 300 back in 2018. Now it has come back to those 300, 330 levels. So MOIL looks interesting, as well as NMDC. And in terms of steel, I would continue to look at the smaller names as such, wherein Kalyani Steel's KSL, which has given a good breakout, has made a multi-year high. So I would focus more on the small cap steel names or focus on NMDC and MOIL.
NMDC as well as MOIL, but Zee Entertainment, that's the stock that we were talking about. Ankur has been tracking the story for a very, very long time and very, very closely. Ankur, are you hoping there'll be an end to the story either way, at least in the near term, because Jan 20th was the D-Day, but ahead of that, crucial meetings underway?
Yes, there is an important meeting which is held by Sony. Now they want to consider whether or not to extend the merger timeline. Remember, till 21st of December, the 2 years time period when this merger was supposed to be implemented ended, and after that both the parties, meaning Zee as well as Sony, engaged in talks for extension of merger, that too in good faith. Now the time period of good faith is expiring on January 20, and both the parties need to take a call whether or not to extend the merger. What we have been given to understand is that Sony is mulling whether or not to do. As far as the obligations are concerned, we have been told even if Sony decides to call off the merger, they do not need to pay any penalty for that, because there was no clause in the merger completion agreement as per sources in the Sony side. However, Zee has been maintaining throughout that they were in discussion with Sony, and they are hopeful that this merger should fructify in near future. So all in all, it depends on what Sony actually decides whether to or not go ahead with the merger.
The ball is firmly in the court of Sony right now. Let's see what decision they come up with. Thanks, Ankur, for joining us with that.